Welcome back. You're still with us on Markets Today. Let's go to the rest of the headline that we are tracking for you. To the fourth headline now. Crude oil prices rebound after plunging by more than 3% as the implementation of sanctions on Russian crude oil eased concerns about oversupply. Meanwhile, the relaxing of China's COVID curbs bolstered the demand outlook. Manisha Gupta is here with a wrap on the action from the energy space. Manisha.
Well, thank you so much for that. After a 3% decline last night in case of crude oil prices, we are back into some positive cues coming in right now. And absolutely, yes, in last 1 week, we have seen the OPEC and allies meeting where the output has been kept steady to an E7 price cap at $60 per barrel coming in on Russia. And then the European Union, which also has curbed imports from Russia. All seaborne oil imports from Russia have been curbed as of now. And come 5th of Feb, European Union will also curb all crude products from Russia as well. So this still is a developing story. Markets are looking at what the expectation right now is from some form of Russian retaliation coming in. Russia has spoken about that, but we still have to see a notification or some communique coming in from Russia. Until then, it is going to be very jittery crude oil markets from here on. Having said that, it also is about the macro situation where you have seen some strength come back in case of the dollar index, and all the data that came in from US last couple of sessions has been positive. So whether it is the US jobs numbers, factory activity and services number are better than street estimate, and that perhaps brings back the flavor that US Fed could be more aggressive going forward on the 14 December meeting rather than a 50 basis point meet. There could be some guidance decisions that could weigh onto the markets going forward. So as I said, quite jittery, and every week we have seen a $10 to $12 per barrel of a crude prices range, which is much higher than what you have seen in last couple of decades itself. Markets do believe that $75 per barrel is going to be a strong support going forward. On the higher side, 95 is going to be a resistance, and within this $20 is what you could be looking at the crude oil prices closing this year as well.
Yes, Manisha, thank you so much for that update. In fact, more on crude now. Uncertainty in oil market is hurting the prices, says Dan Yergin of S&P Global. Jeffrey Curry of Goldman Sachs also weighed in, saying oil market is still fearful of COVID policies and its repercussions on demand. Take a look on what they had to say earlier.
The threat the Russians have, at least they've threatened it, is to hold back on oil supplies and make the market tighter. So we're in a very uncertain and indeed turbulent waters if we do have a global recession. But right now what we see is the oil market, can you imagine that it responds to every piece of news about COVID lockdowns in China? And if those lockdowns are lifted, you're going to bring some significant demand into the market that has now been sitting on the sidelines.
The problem and why the market is very worried on the front end of the oil curve is what if we get a disorderly forced reopening where people self-impose lockdowns. They just don't want to go out and interact with anyone because the caseloads are rising so quickly. That's the risk that I think people in the oil market are fearful of, where you actually have a very sharp contraction in demand, and then you're reopened, and then you get the positive benefits later on. And I think that's the big fear factor in the oil market.
That is all about crude oil prices. But Manisha is back with us. Metal stocks fell today on softening metal prices as the market prices in hopes of further easing in China. Hindalco and JSW Steel closed on trade with cuts of 2%. Manisha, tell us more.
After weeks of gains, the metal prices have come under pressure, and that is because you're looking at stronger than expected data from US. Whether it was about services sector, factory activity, or the jobs numbers, they came in better. In other circumstances, this would have been good news for the industrial metals. But right now, markets seem to be tying everything to an expectation of a further rate hike. And all data now adds up to rate hikes that can continue from US. That has impacted the US dollar index, which has rebounded from its lows. The US treasuries as well gained, and that put pressure across asset classes, including equities and commodities, and the metal prices also. Having said that, the China easing its COVID restrictions is something that the markets continue to take as positive, is the reason you haven't seen a very sharp sell-off coming to the markets here. Apart from that, it also has to do with lower inventories, energy concerns in Europe that will continue to support the metal prices going forward. If you look at the last 24 hours, we have seen the copper prices decline by 2%. Aluminum fell 1% overnight and has traded a percentage point lower in the day-to-day as well. Markets do believe that it perhaps is going to be the sell on upticks rather than buy on dips kind of a strategy going forward for the metal prices for the very near term.
Manisha, thank you so much for joining us with all those updates from the commodity space. Meanwhile, demand is picking up in the cement sector. After a dismal quarter, the industry expects a double-digit growth. Listen into what Sri Digvijay Cement's chairman Anil Singhvi and HDFC Securities Rajesh Ravi have to say.
The demand is picking up. One has to take October and November together because last year the Diwali was in November and this year Diwali was in October. So if I take the two together, I'm very, very happy that demand is really now perking up. November especially was very, very good, which is really boding well for demand to go on till about May or June before the monsoon. So I think we'll be growing much better than what even I was expecting in September. September was looking a little subdued because demand was just not coming into the double digit. But from now on, I think the demand will be double digit till at least May or June.
For the quarter gone by, the industry average was around 530 rupees EBITDA per ton, and it was obviously one of the worst quarter in the recent, I would say, obviously in at least 7-8 years. And things are obviously the industry for sure is out of a storm. And in Q3 onwards, there are multiple triggers. As he also conquered that demand is holding up well, and that is where we believe that there should be at least 100 rupees improvement on the realization side sequentially.
That is all about the cement space. To the fifth headline today, IRB Infras surged 2% on the back of robust traffic growth in November across all projects and all vehicle categories. Vivek joins us to get us all those details. Vivek.
Well, that's right. So IRB Infra, this particular stock has been a stock that's clearly outperformed, from Q1 to Q2. This is mainly on the back of the fact that toll collections that were seeing quite a bit of a dampener as far as last year was concerned, has seen very robust growth and very robust recovery. When you're looking at the numbers, the gross toll collections for November was up almost 6.5% on a month-on-month basis, coming in close to the 366 crore mark, and on a year-on-year basis was up almost 40%. Now, also important to keep in mind that on the base year, that is November 2021, due to the farmer agitation protests, toll collections were actually stopped. So the numbers optically look a lot higher when you're comparing it on a year-on-year basis. Nevertheless, it's a very strong set of collection figures that have come in, and along with the deleveraging that the company has done, this particular stock has clearly seen a re-rating in the last couple of trading sessions.
Okay, Vivek, that is all about IRB Infra. Thank you so much for those details. Moving on, Vedanta tells CNBC-TV18 it is not looking to divest its steel business, but will expand capacity to rank amongst the top 5 steel players in the country. The stock was down by over 1% in trade today. Listen into what the management had to say.
That option is not there at this point of time on our table. Currently, we are busy increasing the capacity of electro steel by finishing the unfinished plant from 1.5 million ton to 3.5 million ton. So with 3.5 million ton at electro steel and 1 million ton at value-added business in Goa, the capacity will go to 4.5 million ton. But you must have also seen that we have taken action to integrate our operation by acquiring the mine, Barmil mine in Orissa. So this gives us the option to increase our steel capacity from now on and remain a player to reckon with in the market. And if we will stay in the steel market, we will definitely like to be among the top 5.
That is Vedanta, but we have a lot of stocks in focus as well. Astra Microwave zoomed 5% on its fundraise plan. Meanwhile, Bajaj Consumer zoomed 2% on news of a likely buyback. Vaishta is here with a wrap on these two stocks.
Well, there are two stocks that have been in news today. One is Astra Microwave Products and the other is Bajaj Consumer Care. Let me start off with Astra Microwave Products, wherein the company is going to be considering a fundraise of up to 400 crore rupees, and the street has been cheering this news. In fact, the stock has been up by 4-5% today itself, and in the past 6 months, the stock has given returns in excess of 40%. So this is also in consideration of what has been going on in the defense and aerospace industry. There are a lot of industry tailwinds which have been going on. So there are other defense stocks also which have been in focus. Moving on to Bajaj Consumer Care, wherein the company is considering a share buyback on the 9th of December. And as of 30th of September, the company has a cash and bank balance cumulatively of 18 crores. And if we include the investments, the amount goes up much more. Though in the past 6 months, the stock was up by about 29-30%. But on a year-to-date basis, the stock has not created much wealth for its investors and has been in the red. Back to you.
Vaishta, thank you so much. So those were the stocks in focus today and the market action as well. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.